right, hello everybody. How are you doing today? If I don't know you yet, if I haven't chatted with you yet, my name is Jason J. Hamilton, and I am the founder of Keep It Simple Financial Planning and the admin of this group. A couple weeks ago, I put a survey out to see what second day besides Sunday that everyone would like to have a little more training to help you prepare for retirement. And Thursday was the number one day, so I said, okay, you know what, let's just do something today. Let me twist my camera just a little bit. And let's do a little extra training today to help you protect yourself and to get ready for retirement so that you can get the help you need and avoid getting ripped off. That's why this group is here. I want to help as many people as possible. Obviously, I can't work with everybody, but what I want to do is give you a good resource and a good place to ask questions, to get real, honest answers and great feedback. And so many people in this group are just so generous and giving with information. And I just want to say I appreciate that, and I want to continue to build this group to be a positive place for you to come and ask questions and to get some answers to your tough situations. So I always forget to do this, but before we get started, I do want to ask everyone here. Well, first of all, I want to celebrate because we just crossed 1,000 members in the group. So yay, 1,000 members. That is awesome. It's been a huge growth over this last month or so. So I'm really excited about that. What I would like to do is invite all of you to invite a friend or family member to this group so that we can grow faster and we can help more people and get more people involved. What I will ask is that you tag them in this group, or at least notify them that you're going to add them so that they can, be aware, essentially, that they're in the group. I don't want to just have stagnant people in the group that aren't participating. So please invite a friend or family member this week to the group. If we all did one, then we'd be able to have 2,000 by next week. So that would be really, really wonderful. So today, what I want to talk about it's regarding a post that was in the group recently. And I can't remember the name of who did it right now. But it was regarding the fiduciary role that basically the current administration crushed, right? So for those of you that don't know, I do work every year. I go to Washington and I meet with the chairman, Jay Clayton of the SEC. I meet with the head of the OCC. I meet with the head of the FCC. So all these big organizations in Washington. And a question that came up last year, this was before the fiduciary rule faced a lot of challenges, essentially, was, what are you going to do about it at the SEC level? Unfortunately, they haven't really done a whole lot. Basically, what they've done is they're proposing what's called a best interest standard, and it leaves a lot of open room for retirement investors like everyone in this group to get taken advantage of, honestly, because it's basically what we have right now. It's a little more strict, but in reality, it's not a fiduciary rule. There's no real backlash or no real protection for you if you're dealing with a broker versus a real fiduciary. So what I'm going to go over today is I'm going to give you these 5 questions that if you're looking for a financial advisor and you're looking for somebody who will act in a fiduciary capacity, I'm going to give you these 5 questions. So if you ask all 5 of these and they pass, I'm not saying it's 100% guarantee, but it will smoke out a lot of the jokesters and a lot of the kind of scammers and just the insurance salespeople, and will get you somebody that at least meets a basic qualifications of a fiduciary. So for those of you that have been around a while, this material is from an old webinar that I had just done before. And so it may look familiar, but it's a good refresher as well if you're looking for somebody to help you out with your retirement planning. So go ahead and grab a pen and pencil. You're definitely going to need to write down, or a pen and paper, I should say. You're definitely going to need to write down these questions. They're really important and they're very specific. You're going to have this training to go back to as well. But these are 5 questions that if you ask these 5 questions, you will smoke out the majority of investors, okay? Excuse me, the majority of salespeople or brokers that are acting as advisors, okay? So let me pull up this material here, share my screen. All right, so let's get this started. So this term fiduciary came up while this is loading. Maybe you've never heard of it before. Maybe you've never heard of a fiduciary, financial advisor. In its simplest terms, what that means, oh, hey, Sharon, thanks for saying hi. What that means in its simplest terms is someone who's legally bound to do what's in your best interest first, okay? So it sounds like a crazy concept, right? That you would want to work with somebody that's going to put their advice in your best interest before their own. But in actuality, it's actually not common that this is required, right? It's not required for over 90% of people calling themselves financial advisors. So I'm going to go through exactly how to smoke some of this stuff out. My computer here is for some reason very slow. I don't know why. If I have to use the slides like this, then I will. But in the financial world, and we're going to talk about this, the term financial advisor is not currently regulated. Okay, a lot of folks, including myself, are actually pushing hard on the SEC to make financial advisor a regulated term, and also financial planner, right? Because you could always just swap that out, and it's pretty confusing for the average investor to really understand the difference. Let me see if I can actually get myself up on the screen here. I don't know. We'll see if this works. Okay, so this is working. I'm going to leave myself off the screen, whatever. I just want to get this training going for you. But the term's not regulated, so you are essentially on your own right now when it comes to looking for help and looking for help from somebody who doesn't have their best interest first. Okay, so let's talk about that. So in the financial world, there are a lot of smoke and mirrors for sure that a potential investor has to get through to find a real advisor. So when I say real advisor, that means an investment advisor, that means a fiduciary, that means somebody who is required to work in your best interest, just like a doctor, lawyer, or CPA would. They all have a fiduciary standard that they all work with, a fiduciary standard of care. Currently in this landscape, it's not required for financial advisors, which seems crazy since that's where you're going to bring your whole life savings to. But anyways, I'm going to help you cut through some of this smoke today, okay? My computer's not giving me a good time right now. Okay. Let me see if I can get this to work a little bit better. I do apologize for anybody that is currently watching. I'm going to put myself in the bottom corner here. And let's go back to this and try to play the next slide, okay? So for those that don't know, the reason why I do what I do is because my parents were ripped off. They were ripped off by an insurance agent posing as a financial advisor, and I'm very determined, to help people avoid this trap. They were sold a bunch of whole life insurance policies when really they should have been investing in things like their IRAs, Roth IRAs, and opening up a investment account for their business, some sort of SEP IRA or 401k for their business is what they really should have done, but that's not what they're advised to do. So that really, in 2008, hurt my family a lot, not being prepared for that. So that's why I do what I do today, because I saw kind of what happened when you don't get good advice. Okay, this thing is just not going to work with me today. It's not having a lot of fun. So hopefully you guys can see this. I'm going to try to make this a little bit bigger. Let me try to scroll that up. All right, hopefully you can see this, okay? We're just going to use the slides just like this. So I truly believe a good financial advisor is one of the best things that you can invest in for yourself and your family. Of course, I'm biased, okay, because I am one. But I have seen a massive impact in bottom line net worth delivered by working with financial advisors, including myself, because honestly, we see hundreds of situations and you're in one. Okay, thank you, Sherry. I'm glad you could see it. Perfect. You're in your own world. You're in your own situation, and it's really hard to see the forest through the trees, as they say, when you're trying to figure out everything about your situation. And it's the first time you're doing it. When you have Medicare, Social Security planning, investment planning, maybe you're looking at when to take your annuities, your pension, what to do with that 401k, when to leave work, health insurance. There's so many things that could be overwhelming when you're trying to do all this on your own, that I truly do believe that it's a good idea to work with a fiduciary advisor, totally. But what I want to make sure of is that you're dealing with a fiduciary, okay? So I know we talked about it a little bit, but let me explain. A lot of people may ask themselves, aren't all financial professionals required to act in your best interest? Unfortunately, absolutely not. They're really not. About 90 to 95% of advisors calling themselves financial advisors right now aren't required to act in a fiduciary capability or a fiduciary standard for you. So that just really puts you in a negative position and a bad position when you're trying to get advice. So probably one of the reasons you might be in this group today, all right? But I'm going to walk you through how to kind of cut through that smoke. So if you've never heard the term fiduciary and you're currently working with an advisor, get ready to be blown away. But to make this simple, there are two types of advisors. There are brokers and there are fiduciaries, okay? That's really what it comes down to. There's brokers, which are salespeople. They sell things, mutual funds for a commission, insurance for a commission. They're the all-in-one annuity salespeople, which, again, I have to make clear I'm not 100% against annuities, but I think they're oversold, and they're sold as an all-in-one product because many folks who in retirement are just scared they're going to run out of money, and annuities have their place, but they should not be the whole portfolio, okay, or your whole income. So brokers work under what's called a suitability standard of delivering financial advice, and fiduciaries work under the fiduciary standard, okay? So fiduciary standard means the advisor must act in their client's best interest when providing any advice. This contrasts with the so-called suitability standard that many commission-based agents and brokers use, which merely requires them to offer suitable advice to their clients, not necessarily the best advice. So my parents were risk averse, okay, and I guess they still are. So by putting them in some whole life policies, the broker could argue that is suitable, but knowing what I know, it's in reality they just needed to really understand a risk tolerance and have a portfolio put together that matches that. That's the real answer to it. Putting all their money in a whole life was not the right answer at all, okay? But the suitability standard is so low that it's very easy to argue. If you look up the cases that have gone through the court system, almost none of them have been won by investors, okay? They're almost always won by the broker because it's pretty easy to skate around that. And now with the new standard, the quote-unquote best interest standard, it's basically just a stepped-up suitability standard. There's still a lot of loopholes in it, and it's still totally separate when you are doing things like product sales, like insurance or annuities, versus retirement accounts, and even brokerage versus retirement. So if you're talking about an account that is not a retirement account, like a 401k or IRA, and it's just a normal brokerage account, that's not going to fall under the fiduciary standard. That'll be under the suitability or the best interest, as what it's being called now. So, when you work with a true fiduciary, every single piece of advice falls under that standard. Okay. So how do you know if the product your broker recommends is the best one for you? Honestly, you really don't. About 90% of all financial advisors in America are brokers, regardless of the title on their business card. They're paid a fee or commission for selling products that are actually obligated. They're paid a fee or commission for selling products and are actually obligated legally to act in the best interest of their broker dealer before yours. So if you actually look at the details of their contract, if you're a broker working for a broker dealer, they're actually legally bound to do what's in their broker's best interest before yours. Okay, so these are all the big companies that you heard of. This is the Merrill Lynch, the LPLs. All these big companies are working in this broker capacity, and their agents are required to work in the interest of their employer before your own when it comes to making recommendations. Okay, this is why I'm doing this training today, because I want to help you avoid this if you're out there looking for investment advice. Okay, so question that I have for you, which I think you know the answer, but does this sound like there is a serious conflict of interest here? And I would say, yes, you're right. That there is. There definitely is. Of about the 300,000 financial advisors in the United States, only about 31,000, or approximately 10%, are registered investment advisors. Okay, they're also known as RIAs, or independent advisors. And as I mentioned at the beginning of this training, that's what my firm operates under. We're an RIA, or registered investment advisor. And then I would be also a registered investment advisor or an investment advisor representative. So this sounds great, right? Just go out and find a registered investment advisor or an RIA. Sounds simple, right? But there's another sneaky trick of the financial industry, and it's called the dually registered advisor. So this is the dually registered, also known as hybrid advisor. This is when in my post the other day, I shared with you that yes, it's good to just ask somebody if they're fiduciary, because honestly, a lot of folks can say yes, right? Because they are operating under, a fiduciary standard under retirement accounts. But when it comes time to talk about any other things like annuities or insurance or whatever it may be, where they can make a big commission, and it'll honestly cost you to pay a lot more in fees and a lot more in cost, which takes away from your retirement income, they can actually take that hat off of the fiduciary and then put a new hat on of suitability. And so in the same conversation, they can switch from fiduciary responsibility to suitability responsibility. And that just, for me, it's just, to be honest, I could probably make a lot more money if I were selling these products, but I just don't feel right about it. And it's in my ethics and morals. And again, there's a ton of other folks out there that are pure fee only registered investment advisors. it's not just me, but I truly believe that the best thing to do for the client is to take out any conflict of interest. It's really important. So, in fact, as many as 26,000 of the 31,000 RIAs operate in this gray area where they have one foot in both camps. Okay, so they're insurance or broker and fiduciary at the same time. So only about 5,000 of the nation's 310,000 financial advisors are pure fiduciaries. So if you're, like many folks in here I've spoken to, you're kind of in the middle of nowhere. You might be middle America. The store might be 45 minutes, just to get to the store, and you might have one person in town that offers any sort of retirement advice. And so you may feel like you have to kind of take what you get. But that's not the case anymore with online tools, with meeting software, with things like what we're doing today. It's totally possible to work with somebody virtually, very easy. I do it all the time. I have clients in 7 states now, and we do this all the time, and it's very easy to do. So please, please, please make sure you're working with somebody who's a fiduciary. Okay, so what the heck? That's only 1.6%. So you have a 1.6% chance to get somebody that's a pure fiduciary. This was as the last numbers that were published. This might be a little higher or lower now, but in all honesty, with the new SEC rule, I think it's going to actually go lower. So these dually registered advisors may have good intentions, but they get caught between two worlds trying to be honorable while also having to make compromises. So my question to you is, why would you ever choose a financial advisor who does not have to act in your best interest? Very simply, you shouldn't. I really don't think you should. That's my personal opinion. Again, I'm completely admitting my bias on this, but I truly believe it's the right thing to do for you, and it takes away a lot of pressure of selling something that's more commission based. So the problem is the vast majority of independent advisors are registered as both fiduciaries and brokers. So how do you find out if you're dealing with a true fiduciary who legally has to put your best interest first and not a broker who only has to do what he or she feels is suitable? Well, today I'm going to give you the exact questions, okay, that you should ask. So if you're watching this, you should definitely take out a pen and paper, okay, because these questions are extremely important. This training will be in here for you. It'll be recorded. You can go back, you can pause it, you can write it down, but let's do your best to write this down right now, okay? So first question you should ask, are you a registered investment advisor? Simple, right? But if the answer is no, this advisor is a broker. So my advice is to smile and say goodbye. And if the answer is yes, he or she is required by law to be a fiduciary, but you still need to figure out if this fiduciary is wearing one hat or two, okay? So if they pass that test, then you go to this question. Are you or your firm affiliated with a broker-dealer? If the answer is yes, you're dealing with someone who can act as a broker and usually has incentive to steer you to specific investments, okay? So not good, not a good thing. And I'm telling you, it's going to be really hard for you to find one that's not affiliated with a broker-dealer because there's just so much money in it, selling commission products and all this other stuff, but it's not necessary for you. Okay. If they answer yes to that question, then you want to probably go a little bit deeper. Does your firm offer proprietary mutual funds or separately managed accounts? So proprietary mutual funds are essentially company-owned mutual funds. Like the ones that are really known for, like Waddell and Reed, any of the big companies, honestly. I always want to say Washington Mutual, but it's Northwestern Mutual. Crap, bad stuff. You really want to stay away from that stuff. The fees are going to eat you alive when it comes to your investment returns, especially going to retirement, where you're probably going to have a lower risk portfolio. 1 or 2% extra is a lot when it comes to your retirement portfolio. But if the answer is yes, then I would definitely say to watch your wallet like a hawk. It probably means they're looking to generate additional revenues by steering you into these products that are highly profitable for them, but not for you. I mean, you're the one who's going to have to pay the fees. They are very, very highly profitable for the advisor, but not for you, okay? All right, the next question you want to ask. Again, you might have gotten this far. If you're already getting this far, you should probably, and they're saying yes to all these things, you just want to get up and probably leave and say thank you very much, go find somebody else. But again, these are all good questions to ask, so let's make sure we take them all down. So the next question is, do you or your firm receive any third-party compensation for recommending particular investments, okay? So this is the ultimate question you want answered. Why? Because you need to know that your advisor has no incentive to recommend products that will shower him or her with commissions, kickbacks, consulting fees, trips, or other goodies. Here's the big secret. I have a lot of friends that are now fee only and they're now fiduciaries, but they started their career in the commission world, right? In the big companies, like I said, the LPLs of the world, the Merrill Lynches, those kind of big companies. And there's so much pressure behind the scenes to sell these products, to sell these proprietary mutual funds. And there's all kinds of kickbacks that are being received by the advisors that do sell them. Unfortunately, I mean, they're huge companies. And so, they bring with them the brand. And so there's a lot of trust when it comes to the average investor. But there's a lot of problems that go on behind the scenes. And honestly, once the advisors seem to wake up and find out what they're actually selling, because honestly, many of them are good people and they really just don't know. And it's really hard to get your first job at a registered investment advisor. Most of the firms like ours or like mine, we stay small on purpose. We want to serve a small amount of clientele in a sense, really have high level service and take care of them. But these other companies are just looking to generate commissions. And so as many clients as possible, a lot of advisors will have 500 to 1,000 clients, and that's just absolutely crazy. But behind the scenes, there's a ton of contests, competitions, and kickbacks that are going into their pocket, and it's all going to come out of your pocket if you decide to give them your money. Okay, so hopefully you got that question down. We're going to move to number 5. Here's a really good question to ask, no matter who you're working with. What financial planning services do you offer beyond investment strategy and portfolio management? Okay, investment help may be all you need, but depending on your stage of life, but as you grow older or you become more wealthy with various holdings to manage, things often become more complex financially. So you may need to deal with things like saving for your kids' college, education, retirement planning, handling vested stock options, or estate planning. These are things that the brokers typically don't touch, and they won't touch tax advice, they won't touch anything like that. So if all they're offering to you for, say, a 1% fee or more is investment strategy and portfolio management, honestly, you're getting ripped off. It's way too much to pay these days. If that's the only service you're getting, which is still common, honestly, I would look elsewhere and look for somebody who can help you with all the other aspects of financial planning, okay? So here's a case I want to go over with you real quick that I ran into that honestly, it was just sad in a sense, but I want to show you kind of what happens sometimes in these situations so that you can be aware, okay? So I changed their name, but I'm telling you about the Branson family. Branson family were 67 years old. They had 1.8 million in investable assets, 3 kids, 2 houses, and a business complex, okay? So their advisor claimed to be a fiduciary, but he sold them a $1 million annuity with a 10-year surrender period, okay? So what that means is he advised that they put $1 million out of their 1.8 million that they had saved over time and put that into an annuity with a 10-year surrender period, okay? So the first problem is true fiduciaries cannot sell products. They can't. That's just not how it works. So this advisor was clearly wearing both hats, and so that's a big problem. But this is how some agents justify saying, oh, they don't charge a fee, right? They don't charge a fee for our financial planning. The plan is free. But in reality, that's not true, okay? What's true is they're going to make a big commission off you. And usually the recommendation is going to be your plan is to put all your money in annuity. So it's important to understand that annuity commissions can range from 1 to over 10% depending on the product. So average annuity commissions, if you see a 10-year surrender period, they probably got 10% of your whatever you put in. So if you put in $500,000, they probably got $50,000 in commission. If you put $1 million, this advisor got about $100,000 in commission just for just one particular sale. So again, if you were to try to get out of your annuity early and get that money back and surrender it, you would take the hit for $100,000. It's really, really bad. But the commission correlation is easy to remember. The longer the surrender charge period, the higher the commission, okay? So if the surrender period is like a year, the commission is probably pretty low. But that also means the company's not gonna make a ton of money off of that product. So not only that, so this person advised him for years and years and years, but he actually never helped them set up a retirement spending plan. So when I spoke to the couple, they were very stressed out about running out of money. They never figured out what they really need to do to replace their income, how much income they need to generate from their portfolio. They never really had any plan. That advisor never took the time to help them put their estate planning paperwork together. And in California here, this left the branches open to huge probate fees. Okay, in California, we have crazy probate fees if you don't have an estate plan in place. And in this case, it was about $35,000 at least. Probably now it's like $45,000 or $50,000. But it's very, very expensive in California to not have an estate plan. So this was just a really bad situation. I felt really bad for these folks. But this is a real scenario. So as I mentioned before, most advisors have limited capabilities once they venture beyond investing. Most aren't legally allowed to offer tax advice due to the broker status. So ideally, you want an advisor who can bring you tools for tax efficiency in all aspects of your planning, from your investment planning to your business planning to your estate planning, okay? So what are you left with? I recommend you find a fee-only fiduciary advisor. You can find a fee-only advisor that's not fiduciary, but you cannot find a fiduciary advisor that is not fee-only. It's just, they're only fiduciary in some parts, okay? So if you get this wrong, it could be very severe consequences. You'll put your whole financial livelihood into the hands of somebody who has to decide between your best interest or putting food on their family's table when it comes to what product they sell you. You'll never know if your advisor is making the best possible recommendations for you or if they're selling you something because they'll earn more commission. And by the time you realize what's going on, it may be too late to make up for the lost time and recover from your losses, okay? It could be really bad if you get this wrong. But if you get this right, you'll have an advisor that is sitting on the same side of the table as you are when helping you make financial decisions. You'll never be sold a product or charged a commission you weren't told about when receiving financial advice. You'll receive the advice that's best for you and your family regardless of your income or asset level. You'll have a team that specializes in unique issues like reducing taxes, helping with estate planning, and helping you optimize your finances throughout retirement, okay? So that's really what I wanted to go over with you today. Let me go back to my other screen here and turn this one off. I'm going to stay on for a minute. It looks like there's some people on. Is there any questions? If you have any questions, please drop them in the chat, and I'm happy to discuss and answer anything about fiduciary status, what questions you should ask, any clarifying questions. So does anybody have any questions? I'm very, very happy to stay on and answer them because this is what you could call a passion subject for me. I'm very passionate about, clients working with a fiduciary, okay? Any questions? Okay, Tom Doyle, thank you. Fantastic info. Thank you so much, Tom. I appreciate it. Anybody have any questions? I want to stay on and answer. We can talk about other things too if you guys have questions about, whatever, when it comes to finding an advisor. Is there any other questions that you have? And if not, we can wrap up. But before we do, as a reminder, please, this week, if you can invite at least one person to the group, that would be great. I'd appreciate that. I want to grow this group and help as many people as possible. Hopefully trainings like this are serving you and giving you value, and you get a lot of value from really working with or really being in this group, right? I want this group to be somewhere where you come in, check in every day, weekly, and you can get something that helps you retire with confidence, okay? So Sherry asked, do I only have office in California? Technically, yes, but I have clients in 7 states, so we work throughout the U.S., so not a problem. Oh, if you want to get a hold of me, the best thing to do is set up and call with me, and I will put the web address right here, okay? It'll be in the comments. And if you go to the site that I just put, hopefully it pops up here. Looks like it did. There you can just schedule an appointment that works for you. I keep certain times, so these are complimentary appointments. The first one's always complimentary. And what we'll cover is really, where you're at, where you want to go. I'll help you with a high-level game plan for your retirement strategy, and I'll give you the most possible value. Some folks have posted in the group about, it's not scary, it's a fun call. We do our best to just really do my best to help you out, to see how much I can I can help you get towards retirement with confidence. Okay, so if you need anything, let me know, guys. Put a comment down below. Ask a question. I always check later, and I try to answer whatever questions I can. Sometimes these posts get lost because of the way Facebook algorithm is, but I do my best to go back and search. So Terry's asking where my office is located. So the easiest way is I'm in California. I'm about 4 exits from Disneyland, okay? So if you're familiar with Orange County, California, right by Chapman University, it's right down the street, same street actually, just go down to the end of the street. So, but 4 exits from Disneyland in California. But 95% of my clients are outside of this local area. There's some in California, but here, DC, Michigan, Florida, Louisiana, Texas now, and some other places. So I forget sometimes all the states. So don't worry about it. If you're not in the local area, we can definitely help you out. It's not a problem at all. And, we want to help you out. I want to help you out. Okay, so appreciate you guys. Thank you so much for tuning in. Like I said, Sunday at 2 o'clock, okay? We're going to do a training every Sunday at 2 o'clock. And then I'm going to try to get one in on Wednesday or Thursday as well on different subjects like this so that you can become more educated and become more confident in your retirement, in your retirement situation. So have a great evening. Have a great weekend. And I will see you guys Sunday, okay? Talk to you soon. Bye-bye.